A very good morning to all our viewers. Welcome to Opening Bell with me, Stacy Pereira, and I'm here to be taking you through all the news and cues that could impact your trading day. Well, we do have a lot to be looking forward to, so let's get straight to all that's trending. Well, we do have Indian equity markets which are likely to start the July series on a positive note. The SGX Nifty is indicating a positive start to Indian equities. We did see the Nifty 50 touch that milestone of 19,000, whereas the Sensex too hitting that 64,000 mark for the first time intraday on Wednesday. And after that gap, we're looking to see this momentum really continue. We also had, in terms of the handover from Wall Street, those indices did close a mix, but we did see the Dow Jones rise about 200 odd points. This pushed by the banking stocks, which really were the ones leading those gains for the Dow. Because they passed that stress test that was taken by the US Fed. You also have the US economy, which has shown a stronger than expected growth with the GDP coming in fact, increasing at about 2% on an annualized pace. So that is a cue that has really turned things positive globally as well. But back home, we also saw a SEBI market regulator whose board has gone ahead and approved reducing that listing time from 6 days that was earlier to just about 3 days. Also has approved more disclosure norms for FPIs. Now, if you look at the trade setup back home here, foreign institutional investors are continuing to be net buyers, and they've bought shares worth 12,350 crores on June 27. This is the provisional data. Whereas if you look at the DIIs, those were the ones that were selling about 1,021 odd crores on June 27. But it is a new series, so we have a lot to be looking forward to. But let me take you through a couple of FNO cues that you should be watching out for. Now, we did see about 12 stocks that saw a long build-up. These included Alchem Laboratories, Delta Corp, as well as Sun Pharmaceuticals, even Interglobe, that is your Indigo Airlines, as well as HUL. Now, those were the ones that saw that long build-up. Now, if you look at long unwinding, about 49 odd stocks saw long unwinding. HDFC AMC was one of them, Dr. Lal Path Labs, Dixon Technology, Metropolis Healthcare, as well as Laurus Labs. And if we look at the short side, we did see 5 stocks only that saw short build-up positions. These were Marico, HDFC Life Insurance, Federal Bank, as well as Bank of Baroda and Aarti Industries. And about 123 stocks which saw short covering, these including L&T Finance, Shriram Finance, Petronet, LNG, as well as Britannia. So those were some of the FNOQs and the stocks that you could be watching out for. It's a new series, so a lot to look forward to. But let's get discussing stocks as well as the strategies that you should be adopting in this new series. We're seeing markets reach these all-time highs, and whether this momentum can be continued. Let me go across to Milan Vaishnav, the founder and technical analyst at Gemstone Equity Research. Good morning, Milan. Thank you so much for speaking with us here at Moneycontrol. Let's get straight to the technical aspects of things. We've seen maximum call open interest at that 19,000 strike, 1.27 crore contracts, if one has to point that out. Also, from the put side, also maximum interest coming in at that 18,900. So quite a small range, one would say. But according to you, what would be that crucial support and resistance level for the Nifty going ahead?
A very good morning to you, Stacy, and to the viewers. Thanks for having me here. Taking a look at the markets on the technical terms, there are a couple of things that I am looking at. First of all, yes, there is a breakout. There is an attempted breakout now. Today, if we still go on to end on the high point of today, that breakout would get confirmed. But that being said, as you just rightly said, I continue to watch the levels of 19,100 to 19,150, because that's where the highest top two accumulation of the call OI is there. And on the lower side, 18,800 to 900 is the bottom I'm looking at, because that was a resistance earlier, and the support and the resistance, since it has now been taken out, is expected to act as support if at all we consolidate from the current levels. But that being said, there are a couple of things that I will be very closely watching. would be the first day of attempt of a breakout from the bank Nifty, because banking and financial space had not participated in the current breakout until today, of course. And we need a strong participation from them. I also expect a strong market breadth, which has been absent because we were not having a strong market breadth, something as strong as we would require for a major breakout to first occur and then sustain. And the third thing I would be little cautious about is the low levels of VIX. But that being said, it doesn't mean that you go out and short the market. We have to follow the trend. I would chase the up move, but I would chase the up move more in the stock than in the indices going forward from here.
Right, so Milan saying don't short yet, but let's get into some details. Bank Nifty, that one you're saying is not really the one supporting this rally at least, but we've seen the Bank Nifty also hit fresh highs. 44,508 is where it closed on Wednesday, but we are seeing that bearish candlestick pattern for the Bank Nifty. But a lot of news coming in from banking counters, be it HDFC and HDFC Bank merger, be it ICICI Securities now trying to delist from ICICI. So is there more action expected from the Bank Nifty?
Yes, see, what happens that in all likelihood, we will also see the Bank Nifty eventually staging a breakout. I think that is what it's doing today. If it opens and stays above 44,400 for some time, it will also attempt a breakout, and that would not come as a surprise because two indices have to confirm with each other when it comes to staging a breakout. So that being said, I expect the banking and financial space also to start performing. But as I just said, I would continue to chase the rally, but with extremely staying very vigilant at current levels, because at any point in time we might see some consolidation creeping in before. Some consolidation happening before the market, tries and accumulates some more strength to extend this breakout, because extension of breakout will also be equally important to watch out for.
Right, Milan.
So one has to be extremely vigilant at these levels.
Right, so be vigilant when it comes to Bank Nifty, but let's look at what we have today. One stock that will see a lot of action will perhaps be ICICI Bank as well as securities, because it's the ICICI Bank board which has gone ahead and the members have approved that draft scheme of arrangement when it comes to delisting of equity shares of ICICI Securities. Now, the public shareholding of ICICI Securities will get 67 equity shares of the bank for every 100 shares that they hold in ICICI Securities. So that will be an interesting counter to watch. But on your screens there, markets opening as expected above that 19,000 levels, but just about 0.3% for the Nifty there, 19,040 odd points. But climbing higher, one could say. So it is that momentum that is continuing. This is where it closed on Wednesday, but moving upwards since. If you look at the Sensex too, that one also, those counters also seeing that touching those 64,000 intraday, but then closing lower. Now again moving upwards, 64,200 odd levels there. That also up by 0.4%. So interesting to see these counters, but like anticipated on the higher level, even the Bank Nifty there crossing that 44,500 levels, like Milan was pointing out that there could be, you must be vigilant at those levels, especially for this. But broader indices, those are the ones that were seeing quite a bit of rally. In fact, the Midcap Index, if you look at just the June series, was up about 8%. Now again, Midcap higher there, small cap too, just about 0.08% higher. So seeing some bit of gains, you could say, overall. But if you look at the sectoral fronts, Nifty IT there, that counter higher as well, just 0.6%, but higher in the green. FMCG too in the green. Most of these counters, I think we have been seeing them, the ones really pushing the benchmarks as well higher. We did see some bit of resistance when it came to the rate sensitive, so at least pharma, or like we were pointing out, the auto, those ones were the ones that were lagging a bit. But here today, most sectoral indices also opening in the green, we could say. Nifty consumption. We've been getting that kind of data coming in even from the US, where their consumption output has also increased, and which is why a similar kind of reaction even coming in for the Indian markets. Well, but you can see on your screens they're 0.5% higher, the Nifty. Let's also look at the gainers and losers. On your top Nifty gainers, we do have Power Grid, Asian Paints, Infosys. That one just had its AGM, and those the commentary coming out of there quite positive, one could say, and that's why you're seeing them as your top gainers. HDFC Bank, M&M, Divi's Labs also among the gainers there on your screen. If Wipro, Hero MotoCorp, Titan, also those ones are gaining quite a bit. But look at the losers. We have Bajaj Auto there, Eicher Motors. So your couple of auto counters that are down in trade, Apollo Hospitals, also Hindalco, Tata Steel. Now we've been seeing some kind of action even in these steel counters of late, and which is why those ones coming under some bit of pressure. But let me get back to Milan and ask him about sectoral front. What should one be looking out for? Today at least we are seeing quite a good sectoral gains for most of those counters there. So how is one supposed to be looking at, rather which sectors is one supposed to be looking at the markets right now?
Looking at the sector, I would adopt a mixed kind of an approach. I will not be totally risk on, I will not be totally risk off. So coming to some high beta stuff, I would be looking at Nifty Energy and Nifty Auto sector, as well as are you able to hear me?
Yes. Go ahead.
Yeah, sorry for that. So looking at the sectors, I would be focusing on a mixed bag. I would not be completely risk off, as I just said. I will not be completely risk on either. So coming to some high beta space, I will be looking at Nifty Auto Pack and Nifty Energy Pack as well. That is the group we should be looking at, along with the certain select banking names. That is needless to mention. And on the other side, I would also be a little bit defensive and will be looking at some Nifty IT and pharma stocks going ahead from here.
Right. So IT and pharma, any specific stocks, Milan, that you'd like to give our viewers that they should be looking at, or any counters that you personally like?
Yeah, from the pharma pack, I'm looking at Sun Pharma. Sun Pharma can be bought above 1025. We can expect 1100 on the stocks while maintaining the stop loss of 980. The other stock that I'm looking at is Larsen and Toubro, L&T, that is. We can buy above 2425, expect the levels of 2530, and we can keep a stop loss of 2375 on the stock.
Right, that's quite interesting counters coming in there from Milan. He likes L&T as well as Sun Pharma, so that could be something you could be looking forward to, but also touching new record levels each day. So that is something that is keeping investors really happy, one would say, on Dalal Street. Let's also look at a couple of other stocks that are going to be a buzz. One of them is going to be MCX, and that's because they've extended that deal, their existing software vendor, that is 63 Moon Technologies. This is for their trading and clearing platforms, and this extension has come for another 6 months, which will come into effect from the 1st of July. Now, the services cost rather quite a bit because they are paying about 125 crore per quarter for this, and this is much higher than what they were paying 63 Moons earlier in the previous deal that they had with them. Now, another stock that we can also look forward to is Creditaccess Grameen, because we're picking up from sources that the promoters of it are likely to sell up to 5.8% stake in the company, and this could happen via block deals. We're also given to understand this whole block deal could be anywhere close to worth close to 1,107 crores. So that would mean that the base price of this block deal is somewhere close to 1,230 per share. It is interesting because we've been seeing a lot of block deal action happen of late. Perhaps also a reason why we're seeing this rally, because a lot of these stocks and a lot of FII is really picking up state. So it will remain to be seen how and who really picks up state in Creditaccess, but for now, the India Holdings has about 73.68% stake in the company as of the March quarter. So that's going to be interesting to be looking out for. But let me also get in my fundamental analyst. My guest joining today is A K Prabhakar, the head of research at IDBI Capital. Thank you so much, sir. Good morning. Thank you for joining us here on the show. We are seeing new highs, Nifty conquering different peaks, you could say, even the Sensex no less. So what is your assessment of this? Are we going to see this momentum really continue on new highs for all the indices perhaps in this July quarter, in this July series?
Good morning. I feel so. No, see, 18,600 was a high in 2021. So now we have reached, we have crossed 19,000. So I don't think, we have done great. It is, we have been moving sideways. So I don't think, we have done great. But stock specific or sector specific, they have given better returns in the last 2 years. So I think this momentum will continue. And we are, as India as a country, we are doing a lot of things right. The Prime Minister visit to US, there will be a huge re-rating in our stocks and sectors which will perform. So if we are stock specific, I think returns will be more than your index.
Right. So you seem a little bit cautious, one would say. Is this a good time to be entering the markets, or should one wait it out and, then take a call much later when things stabilize, you would say? Or is this the right time to be entering now because there is a further rally according to you?
See, any market, there are opportunities. So I will not be cautious. I think there are lot of opportunities, stocks which are very attractive, which has not rallied in the last few years. For example, Blue Dart has not done anything in the last 1 year. Now you have Bharat Forge and Bharti Airtel, which has not done anything major. So there are always stock specific things to happen. IT as a sector has not done anything in the last 1.5 years. If you are looking at 2 years, IT as a sector looks very good. Tech Mahindra is having a new MD CEO, Mr. Mohit Joshi. He comes from Infosys. So there is one stock which can surprise us in the next 2-3 years. So there are a lot of stocks which are looking good for a long-term investor. You can do as a SIP. And AMC stock, after a very long time, I'm seeing a rally today. So I think AMC has not performed for the last 2 years. So again, there are stocks, if you take UTI AMC, they pay very high dividend, NAM India, HDFC AMC. The dividend yield itself is very good. So there are pockets of comfort and valuation. I don't worry about Nifty or how the market behaves. I worry about if I'm getting a good valuation, whether there is a good entry point. So in that, I think there are a lot of stocks which are still not rallied, and there is huge potential to make money.
Right, so huge potential to make money. But let's go back. You were pointing out to IT stocks. In fact, over this holiday, we've seen both TCS as well as Infosys in their AGMs have rather given a cautious commentary, you could say. They're talking about double-digit growth, but they're also warning about the volatile times. We are getting positive data from US as well. There, things seem to be stabilizing. So maybe that recession that everyone was fearing might not happen. But could that really change much in terms of IT spends, or how we're going to see the IT basket really perform?
Yeah, when you see that AGM notes, they have got the good orders. TCS has got good orders. So I don't see, spending will be, debarred or, it will be delayed, but it is not, going to be denied. So I don't think, we should worry too much. Yes, you get a short-term opportunity when the results come and when the commentary comes. But for a long-term person, I don't think, TCS and Infosys offers very good value. I mentioned even Tech Mahindra. There are many mid-cap stocks also, LTI Mindtree. So there are many stocks, which has corrected and which looks good for 2-3 years. Now, whatever pain we are talking about is just 6 to 9 months. I don't see more than that.
So what are these pain points? What could perhaps be these pain points that could bring a correction or sorts in the markets or in specific stocks as well? What would be those headwinds?
The fear of not spending in US, that is where IT stocks are not performing. But I think this is there in the price. If you are looking at 1 year, 2 year ahead, I think there are value at this levels. And the large cap IT stocks are at a very attractive valuation, whereas mid cap has raised ahead. You check any mid cap, they have outperformed the large cap. So I think large cap offers a very good comfort in valuation wise.
Right. Prabhakar, what's your view on the pharma space? Now, we have seen the US FDA be quite active of late. A couple of inspections on units here, as well as approvals that have come in from the US FDA. Is this a good time to be looking at the pharma space, this sector?
I feel so. No, I was looking at the commentary of all the management. They said there was a huge inventory. Now the inventories are behind. So previously it took 90 to 100 days for a goods from India to reach US, but now that has come to pre-COVID level. It is 55 days. So and they were also stocking because getting goods was very difficult. Now that destocking has happened. So, and that is why, FDA is clearing so many things because, they are in scarcity. So I think Sun Pharma, Divi's Lab, Dr. Reddy's, these are few things, which are traditionally very good. But I like even Gland Pharma. Now I was reading the commentary, their plant was shut down due to expansion. Now that has come on steam and the worst is already in the price. So best is yet to come. Somebody looking at 50% return in next 2 years, I think Gland can offer that.
Right. A K Prabhakar, do stay with us. We do have a couple of stocks that we're going to be looking at specifically. That is BPCL as well as Canara Bank. Both those government companies, you could say government-run companies, are looking to raise funds. Now, when it comes to BPCL, they have got an approval from the board of directors to raise about 18,000 odd crores. And this capital will be raised by issue of equity as well as rights-based issues, whichever is eligible to shareholders. So that is something that will be interesting. That counter is also up in trade, but when you look at Canara Bank, that one too is seeing its board approval for raising capital through FY24, and this could be anywhere around 7,500 crores, but via debt instruments. So how is one supposed to be looking at a public sector enterprise? Maybe Prabhakar can only come in on this and see these counters also specifically, but also as a whole, a lot of action coming in from PSUs. So how is one supposed to be looking at those?
No, see, in PSU, I will divide into different segments. We like defense PSUs. We have been very positive on defense PSUs, and even in railway PSUs. When it comes to oil companies, it is too volatile. It depends on the international prices. There are a lot of moving points, and with capacity expansion, I think I will stay away from BPCL. But when it comes to PSU banking, after a very long time, we have seen the asset quality improving. So I'm positive on PSU banks. So I think that will take time to play out. Now banks are not performing. Now it is the NBFC which is doing good. So Canfin Home or PNB Housing, Mahindra Finance or Shriram Transport, L&T Finance, these are doing better. So I think financials will take the leap forward in the next 6 months to 1 year. I think banking will take some pause before they can rally, in my view.
Right. And finally, a word on auto stocks. Should anyone be looking at those right now? Any specific counters that you're liking from that basket?
No, there are auto ancillaries which are looking very good. So I will play the auto ancillary rather than playing auto. So we like Sonacom, Bharat Forge, Minda Corp. These are few companies which are looking good to us. So I will stay with auto ancillaries.
But could the monsoons really play the spoil sport here when it comes to at least auto stocks?
See, good monsoon also we have seen rural distress. So I don't think that will have any major impact. If we have a very big deficit, yes. But otherwise, I think things will be normal for auto.
Right. Well, A K Prabhakar, thank you so much for giving us your time and also helping our viewers understand how they should be navigating this market. A lot to be looking forward to. New highs that we are touching every day. Counters, both Nifty and Sensex, happily in the green over this weekend. We could say investors could enjoy that much needed green, and also the fact that we have a new July series getting into. So that is something that will keep the cheer on Dalal Street, we can say. Well, with that, it is a wrap and goodbye from the entire team that's putting this show together. Thanks so much for tuning in. Please do post your comments and feedback in our comment section, because we'd like to be taking your feedback and improving. But from everyone putting this together, thanks so much for tuning in.